This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices a little bit lower this morning. This after, though, we did have record highs for both the S&P and the Dow yesterday. Some recovery, though, with factory orders coming in stronger than expected, up 0.7%. The guess was up 0.5%. Still feel that the main trend is higher and that the dominant influence has been and will continue to be the low interest rate environment. So this is a long-term trend, and I think this will continue for quite some time. So look for stock index futures to trade higher on the day, even though now we are still a little bit lower on today's session. Over in the currencies, seeing the euro currency higher as it now appears to be fully factored in that the European Central Bank at their policy meeting this Thursday will add more accommodation to their banking system. Also, a majority of analysts believe that the ECB could take deposit rates actually to a negative number. And this would be the first time that a major central bank would do such a thing. So it appears that the ECB is very determined to stimulate their economy, even possibly taking deposit rates to a negative number. Seeing some strength in the Australian dollar, this after a measure of Chinese manufacturing increased. Also seeing the dollar index a little bit lower as major resistance areas are holding. Longer term, still feeling that the dollar index will work lower. The yen should work lower as Japan's economy slows, and the pound is likely to work higher. Even though there are signs that the UK economy may be slowing to some degree, it still appears that the UK economy is performing much better relative to economies elsewhere in Europe. So it's with that in mind, look for higher prices for the British pound. Treasuries, after making new highs for the move on the 30-year bond last week, a couple of days of profit taking coming in. We are getting now close to very important support areas in the bonds. Longer term, still looks like the main trend is higher, and this is a trend that is likely to last for several months at the minimum. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.